I've been in commercial real estate for just under 3 years now. In that time, I've done around $20 million in deals, either purchased them myself, helped investors purchase, or just been a part of the deal in general. In this video, I'm going to teach you the 5 main things that have helped me get to the point I have got today. First things first is you have to have your buy box prepared, okay? And what I mean by buy box, it is your purchasing criteria, okay? So what I mean by that is, for example, my personal buy box is a 60,000 square foot industrial building, specifically industrial building, okay? 60,000 square foot plus, up to 200,000 square feet, okay? So a very tight strategic buy box. Not only do you want the asset type and size, but you also want to figure out what your profit margins need or what you're requiring or wanting, okay? That's the second main thing. Another thing that you have to put into your buy box criteria is location, okay? If you're you reside in Colorado, okay, I would recommend keeping your buy box local to the state of Colorado, at least in the beginning. Mine is in the upper Midwest, okay? So my buy box is 60,000 to 200,000 square foot industrial in the upper Midwest, okay? And another thing that I like in my buy box is below market rents, okay? And the reason I ask for below market rents specifically is because if they have a 3-year lease or lower, sometimes I'm able to negotiate a new lease with the tenants earlier than their 3-year lease term, okay? And what I'm able to do is increase their rents, still keep them below market, but increase them a little bit more than what they're paying now, and citing them to a new and longer term lease. And what that does is it allows me to negotiate the lease sooner than their expiration date, which allows me to add value faster and sooner, okay? So I raise my cash flow, which in turn raises the value of the property. The reason having a buy box is so important is because when you go to look online or you're calling brokers or looking at talking to other investors, you want to have a specific buy box in mind, because if you're looking for too many buildings, a too broad of spectrum, you don't have a specific thing that you're looking to buy. You can't just go to a broker and say, hey, I'm looking to buy commercial real estate. You have to really narrow down that buy box, so when a broker or an investor or someone is trying to help you find a building to purchase, they know what they're looking for. If you just say commercial real estate, well, that is such a broad spectrum to where they're just going to start sending you random deals and you're not going to know if they're good or bad. To where if you have a really strategic buy box, that allows you to underwrite them quickly, see if it's a yes or a pass a lot quicker, and you just have a better way of finding something that's going to be profitable for you. You're going to be able to understand that deal better. The second most important thing to have is location. You have to have a location picked out, and why that is so important, okay, is because if you reside, say, in California and you're looking in New York, you're not going to know that location, area, or market as well as you would your local California state, okay? If you're looking at properties in other states, especially at the beginning, you're just not going to have as much knowledge in that market as you would in your local market, right? So if you have a vacancy that pops up, that's going to be a bigger problem because you don't have teams in that area, or you aren't able to come check on the property. You're not able to know the market, what tenants are moving around. There's a lot of unknown that goes with investing out of state. So especially at the beginning, until you're a seasoned investor, stay in your local market. Location is everything. You want to be next to highways, major roadways, Starbucks, Costco's, Home Depot's, all these major retailers, because that helps more populated areas, okay? Another reason location is so important, because again, when you're first starting, you want to build a team that's local to you. So if you want to, or if you need to show up at these properties, you're not having to fly across the country or to another state. You're able to just drive there within a few hours. So I was saying, a 2 to 3 hour radius of where you're located. And the third thing is, make sure you are building a very solid team. Building a team requires having a good broker that you can count on, okay, to purchase, sell, and lease your properties. A second person you want to have in your back pocket and build a relationship with is a good attorney, Okay, they can draft up leases, operating agreements with you and your investors, sign new leases. There's multiple things that you're going to need an attorney for to protect you. Okay, you never want to get taken advantage of with investors, buyers, or sellers. So having an attorney is very, very important. Third thing would be a property management company. All the properties I own, I do not manage. They're all worked out and managed by a third party property management company. Okay, and what they do for me is they allow me to take a step back and focus on other things like other acquisitions or dispositions, okay, or other businesses that I have. That's the major benefit of hiring a property management company. Another thing they do is they take care of all your bills, expenses, income, snow removal, lawn care, if pipes burst, they take care of all of that, okay? And remember, with triple net lease, the tenants pay for all expenses, so they pay for the property management company. A lot of guys try to have or do things on their own. In reality, yes, they save a few percent and have a little bit more income, but at the end of the day, problems arise, you're answering phone calls late at night, so it's just much more beneficial to have a good property management team in place. Okay, so those are the three most important people that you need in your back pocket to really be successful in real estate in your current market. The next thing, and this is building relationships, and in my opinion, this is probably one of the most important things to be successful in any sort of real estate endeavor, okay? And what I mean by that is outside of your team, which I touched on a little bit previously, is you need to continuously build relationships with brokers. You need to go to events. You need to go to mayor's lunches. You need to get in the Chamber of Commerce. You need to do all of these things to build your network. I am a firm believer that your network is 100% your net worth, okay? And what I mean by that is the more people that know what you're doing, know what you invested, know how you operate, know how you act, know how you dress. All of these things are so important, right? Because when you are meeting these people, you want to have that firm handshake. You want them to understand what you do. So if they have an investor, or if they have a deal, or if they have value that they can add to you, it's going to be a benefit, okay? And that goes both ways. It's a two-way street, okay? So don't always take from people, but see how you can be of value and offer something to someone. Somehow you can be of value to them, right? So figure out what ticks their talk and see how you can be of value to them. It's always going to come around full circle, and that is 100% guaranteed, okay? So building relationships with all of these people, building connections, building that network is by far, in reality, in any business endeavor, is very, very important. And last thing, building and coming up with and strategizing on a exit strategy, okay? Every single commercial real estate deal or any real estate deal that you do before you purchase, okay, you have to have an exit strategy in mind, okay? It doesn't always have to be exactly the certain year that you think it's going to be on year one or prior to purchasing, but at least have a strategy or an idea when you want to sell it, okay? Because if you go into a deal saying, hey, I'm going to buy this deal and go from there, well, that's not going to work for an investor. The investor is going to be, okay, where and when am I getting my return? Is it in 2 years? Is it in 3 years? Is it in 7 years? Okay, so you need to have a strategic idea of when you are going to exit this deal. And like I said, say before you purchase it, you have the plan of selling this thing in 7 years. I'm not saying you have to sell it on year 7, but at least have that plan in mind so you're able to pitch it to other investors, banks, and even for your own underwriting. You have to understand what the market's going to be at that time, right? I posted this the other day and I have discussions with a lot of my colleagues is even though you have that exit strategy in mind, I would never be opposed to selling it earlier or later, depending on what the market is, what interest rates are, and what you're able to sell the deal for. In my opinion, this has worked for me. Always sell a building at its peak value. Some people hold things for so long, okay? So like I said, if you have the opportunity or have a buyer willing to purchase this deal at a high basis point, always go ahead and sell it, because you can always 1031 this cash into another deal and continue to roll that deal like a snowball. Continue to buy bigger and bigger deals, all tax-free. These are the 5 most important things that have helped me find success in commercial real estate. I greatly appreciate you guys tuning into today's video. In addition to that, we will be hosting more videos weekly, every single week, coming out in the future. It would really help me out a lot if you would subscribe, comment, or like this post so we can continue to produce these videos and help other people that are interested in commercial real estate.